All right, good morning, everyone. It is now 11 a.m. We will go ahead and get started. I first want to say welcome to the You Are Worthy Understanding Credit and Home Buying workshop on today. I appreciate you taking time to join us during the brunch hour. We will go ahead and get started. I do not want to keep you too long. I do want to introduce Ms. Sakina Andrews, who is here with us on today. She will be helping us going over our home buying options and information. Sakina, would you like to introduce yourself?
Hello, I'm Sakina Andrews with Core, Ohio. Thank you for having me, Virginia. Like she said, I'll just be going over really just the process of home buying. Some people have misconceptions of what that process is like and think that they don't need a realtor, when in reality, the best option is to have a realtor.
Absolutely. Absolutely. Well, I'm excited. Let's go ahead and get started. I see a few more people coming in, so welcome you all. Um, we'll go ahead and get started because it is 11 a.m. Just a quick disclaimer. Now, the information in this presentation is provided for educational and informational purposes only, and it should not be substituted for professional or legal advice. A lot of the information that I share is based on experience and things that I have gone through myself, also research and things like that. However, I'm not a professional or a lawyer. So if you need any detailed or specific information, I suggest you do reach out to someone in that field. Now, as you know, we are doing this meeting via Zoom. And Zoom is open to everyone in attendance. So please do not share any personal information that you do not want others to see or hear. If you have specific questions about your personal circumstances, please feel free to reach out to me outside of the presentation. So we'll go ahead and get started. So credit. So we'll start with credit, making credit work for you. We often hear the term credit score, credit report, and credit history. But what exactly is credit? So in simple terms, credit is the ability to borrow money and repay it later. When we use credit, that creates a credit history. That credit history is compiled into a credit report. That credit report is used to calculate a credit score. So there's different parts of understanding credit. So your credit history plus your credit report equals your credit score. You guys know I like math and numbers, so I made it into like a little equation. When you hear the term good or bad credit, it normally refers to your credit score. So how do you obtain your actual credit report? There are three major credit bureaus that we use, which are Equifax, Experian, and TransUnion. There are multiple ways to obtain your actual credit report. However, I do like to use the annualcreditreport.com website because they give you actually a free copy of your credit report. Normally, it is once a year that they'll give it to you. Right now, due to the pandemic, they're actually giving you one credit, excuse me, um, you can get access to all three of them once per week. And I think that's through the mid of April. So if you want to get all three of your copies this week, next week you can get another set of copies as well, just to see if any changes have happened. You can obtain these credit reports through the website online. You can actually mail in an application as well, or you can call the annual credit report company and they can mail it to you. So once you actually obtain your credit reports, you want to view the actual reports that you receive. Your credit report is a record of some of your bills, payment history, public record information, and inquiries by lenders into your credit history. So anytime someone looks at your credit history, those are called inquiries. Um, there are 5 key elements to the actual credit report, and these include payment history, the amount you owe, the length of credit history, any new credit opened, and your types of credit. And these credit reports may be used by credit providers, banks, and landlords. So if you look on the screen here, it will give you like a percentage. This is based on my FICO, a percentage of each element in your actual credit report. You see the payment history here is showing at 35%. So that is the majority of your credit score or credit history is going to be based on your payment history. And then it shows you here the amount you owe is ranged at about 30%. The length of credit history is at 15%. New credit opened and the type of credit, those are each 10%. So this just kind of gives you an overall idea of what is looked at and how the credit score is actually calculated. So why do credit reports matter? So in today's world, your credit report is used in almost everything. It is important to check your reports for error. This can also help guard against identity theft. Your credit report is used in pretty much everyday life. Employers use it when you're trying to get a job. You may use it for insurance companies, such as like your renter's insurance or your medical insurance actually may also use your credit report. And that is used to help determine like your premiums. And actually some utility companies also may review your credit report when you try to get in contract with them. So this is just a list of everyday things that we go through or we experience that may actually require a copy of your credit report. Getting an apartment, getting insurance, everyday activities that we go through some of them require the use of a credit report. So now let's talk about actually building good credit. So as we mentioned earlier, there are multiple elements of your credit report. Each element is used to calculate your actual credit score. The base FICO scores range from 300 to 850. So normally you'll see a credit score between the numbers of 300 and 850. FICO determines a good, oh, you guys can't see my quotes, quote unquote, a good range is 670 points to 739 points. They consider the very good, quote unquote, range as 740 to 799 points, and the exceptional range as 800 to 850 points. So again, that's based on FICO's, that's what they define their scores as. So this is why it's so important to review your actual credit report because it can affect your actual credit score. So how do we build good credit? So the first thing I always suggest is to pay your bills on time. Even if it's only the minimum payment, pay it by the due date. Most lenders do not report late until 30 days. However, they are able to report at day one. So I would not even take a chance in waiting for that 30-day mark. I would just make your payment by the due date because they are legally able to report your late payment at day one. Step two, I would suggest is to avoid maxing out your credit card balance. Review your credit limit and try to keep your usage less than 30% of your limit. That is the rule of thumb, is 30%. Try to pay off your credit card balance each month in full, if you're able to. Again, that will help eliminate with interest fees. You won't have to pay any additional fees for just having a balance on the card. That's something that I always suggest. If you are able to pay your credit card balance in full each month, pay it off in full. If you need to use it again, you can still use it again, but please make sure that you try to pay it off in full. The third thing I would suggest in building good credit is not to close any old accounts once it's paid in full, because this can affect your capacity. I see a lot of people, once they pay their credit card off that they've had for 10 or 15 years, once they pay it off, they close the account. The reason that I suggest not to close the account is because those payments that you've been making for those 10 to 15 years, that actually looked good on your credit because of your capacity. It shows that you were able to pay this account for those 10 to 15 years. Once you close that account, that time, those years are pretty much erased. It's like you never even had this account, you never paid. And lenders want to see that you're able to make your payments. They want to see history. So that's why I suggest not to close the account. So because the longer you have your account and pay it on time, the more it helps your credit score. And as we know, a higher credit score makes it easier to qualify for a loan or get lower interest rates. So it looks really good on your credit report when you have that longevity. So those are my suggestions for building credit. So we are going to actually pause here and going to see if there's any questions, comments about credit. I do not see the chat. I'm not sure if anyone wrote in the chat as of yet.
I can see it, Virginia. I don't see anybody writing in the chat.
Okay, thank you, thank you. All right, well, we will go ahead and start on our home buying part of our presentation. I'm excited. So this part, I do want, if you're able to, if you're not too shy, I have a few statements that are often heard during the home buying process. If anyone would like to take a chance at answering these statements, they're true or false, feel free to unmute yourself or write in the chat and let me know your thoughts. So the first statement I have is you need 20% down to purchase a home. Is that true or false? Anybody want to take a go?
I have Nikisha Nichols said false.
Okay.
Rebecca said true.
Okay. So the answer is actually false. So awesome. Thank you, Nikisha. All right. How about the second one? Before you purchase a home, you must pay off all other debts first. True or false?
Nikisha said false.
Okay.
And hold on, I got another answer down there. Rebecca said true.
Okay. So we're tied 1-1, true or false. Anybody want to break the tie? Going once, going twice. All right, the answer is false. You do not need to pay off all other debts before purchasing a home. All right, and the last true or false statement that we have here is the first time home buyer loan is the best loan. True or false?
Nikisha said false. Hold on. Let me see which one or what question are we on? Hold on. Nikisha said false. Rebecca said true.
Awesome.
No, Rebecca changed it to false.
Gotcha. Okay. Awesome. So both of you ladies are correct. That answer is also false. So these are actually 3 myths to home buying. We will get into more details here in a moment, but these are kind of the top 3 that I found online, that a lot of people think that these things have to be done before they can purchase a home, and it's not true at all. Granted, you want to make sure you can have these things just in case, but these are not always true. Awesome. Thank you, ladies, for your participation. I appreciate it. I'll be getting with you both afterwards. Okay. So this is the question. Should I rent or buy? Dun, dun, dun. This is like the top question that people always ask when they're wanting to purchase a home. So of course, that depends. So what I did is I generated some statements, benefits and actual disadvantages of renting and buying. So let's just dive in. So, of course, buying is not for everybody. And of course, renting is not for everybody. Benefits of actually buying a home is the number one benefit that everyone talks about is the building of equity. Equity is the difference between the home's fair market value and the outstanding balance on the home. Most people purchase a home with the intention of it selling or earning it being worth more than what they paid for it. So it's more of like an investment. So that's what they mean by building equity. There is no landlord when you purchase a home. Your home value typically increases with the market. There are tax deductions. Normally, there are fixed payments as well when you buy a home. Some disadvantages of buying: there is no landlord, so that can be a good thing and a bad thing. However, with no landlord, as a homeowner, you do everything pretty much yourself. The mortgage payment is typically higher than rent. Utilities may increase with more space in a home because now you have a bigger space, so your electric bill may be higher, your gas bill may be higher. So there's just different utilities that you may want to get a security system. So that's something that you may have to add into your utility bills. So those are the disadvantages of of buying a home. So what are some benefits of actually renting your home? Well, you get more flexibility. And that's as far as maybe with like your renter and things like that. I guess it really depends. Normally, if you don't pay your rent and you're getting evicted, there's an eviction. That's a whole process. And I don't know how long the process takes, but there's a whole process. However, with buying a home as well, there's a foreclosure process. So this is kind of similar, but there are some differences in it. Another benefit of renting is possibly cheaper monthly payments, so lower rent. Normally, when you're renting, there is no maintenance responsibility. So you're not cutting your own grass. You're not doing those things that a lot of homeowners have to do. You're not planting your flowers. You're not doing all the yard work. You're not doing things like that. Some disadvantages of renting. Now, rent can change at any time. And I actually just found this out. Normally, I know like when you're renting an apartment, normally each year the rent does increase. It happens almost inevitably, like it's every year. But I actually found out that a landlord can actually, I don't know if this is more so a private landlord, but they can actually change the rent at any time. So if you're paying $500 today, tomorrow they can tell you it's $550, and that's legal. They're able to do that.
Now, Virginia, I'm going to chime in here for a minute. On personal experience, what you just said is true. People, oh my gosh, like going month to month, we all think that, okay, I'll just go month to month, so I'm not locked in a lease and I can just go ahead and move when I want to. You are so right. That is not the case. If you are not locked in a lease on a certain amount, Virginia is 100% correct. They can come tomorrow. They can tell you, we no longer want to rent to you. And then you got to move. You by law, you have a certain period of time, but they can also raise the rent. That was, I know someone that went through that for personal experience not too long ago. And with me helping them, I found out that information. We were told, do not approach them. Do not approach the landlord for your fixes until you sign a lease. If you don't sign a lease, you have no leverage at all.
Wow.
Yeah. And that's personal experience that I went through with someone.
That's
Here
perfect.
we say. Mm-hmm.
Thank you.
Sorry.
Oh no, that's perfect. That's what I needed because you know how you see, like I read it, but I'm like, I'm not sure is that real? Is that valid? But thank you for the experience because now I know. You know what I mean?
Not only that, here recent, I don't know what has happened with this COVID situation. It's almost like some landlords just didn't care, I guess. With the COVID situation, I encourage everyone who's signed a lease since this stuff started to actually read that lease, because they have put so much stuff that you can and cannot do in their apartments now inside those leases, and nobody's paying attention. Nobody's paying attention until you violate it and they charge you that fee. Then that's when people start reading leases and finding out stuff. So if you're signing a lease, my advice is to read that lease, because you may end up paying them a lot more money than just your rent.
Wow.
Mm-hmm.
Wow.
Yes.
I understand why they would put probably these new clauses and things into it, because it's a pandemic that no one expected. So now they're revamping how they're doing things, which is not fair to the renter, to us.
Right.
Like
Right.
it's crazy. It's crazy, but they can
Right.
legally do it. So that, like you said, that's why it's so important to read your paperwork, your documents, and make sure you have an understanding before you sign anything.
Mm-hmm.
Because you may be signing, like you said, additional fees and things like that, things that we don't even think of
Mm-hmm.
in the paperwork. So it's like, what can you do? Your signature is already on here.
Right.
It's awesome. Thank you for that. I appreciate that.
Not a problem.
Awesome. So that's pretty much the buy versus rent. Another thing I did want to point out with the one of the disadvantages of renting, you really have limits on your customization. So you're not able to paint as much as you would like, or to elaborate, you can't decorate as much as you want and things like that. It's not a big deal, but it could be a big deal for some people. As anyone who knows me knows, I am doing some revamping or some improvements, home improvements, I guess is the correct term, for my home. So we just painted my son's room half blue and half red, and it's like that's something that I could have never done in an apartment. And even if I did do it, I would have to get someone to repaint it the original color before moving out. So it's just different things. You're able to express yourself more when you are buying a home. So this is the roadmap to ownership. So this is a worksheet I use, and it's actually provided by the CFPB. I use it when I'm meeting with someone that is interested in actually taking the steps to purchase a home. So these are just the things that we do ahead of time. We check our credit scores. We decide how much you want to spend on the home, discover your options, what types of loans and things like that are out there. And we build your team. And when I say build your team, that includes your lender, also your realtor, your home inspector, and possibly looking at different insurance companies. A lot of people think that sometimes the lender and the realtor are actually the same. They're actually not. Now, you may have a realtor that works with a lender, but normally it's two different people. And actually, Sakina, if you wouldn't mind chiming in here to give us like some steps on what you see from a realtor's perspective of maybe some things that we miss when we come to you as a realtor, or any input you have about this part, like the actual steps to becoming a homeowner.
Okay. Now everybody know that right now generational wealth is booming. That's all everybody wants is generational wealth. They're ready to buy a home and get that ball starting. The number one thing that can be challenging for me as a realtor is that when I get a client who is not realistic. You have to be realistic when you first start this process. You can't get a $350,000 home if you're only making $35,000 a year. But believe it or not, I do get clients that come in that way. So the number one thing is be realistic about your finances, what you can afford, all that. The steps in the process is meeting with me first. Meeting with me. At that point in time, I have a conversation with you about, do you have a lender? If you don't have a lender, Virginia was right. I have a few lenders that I work with, and you can speak with both to compare who can do what for you. They'll tell you what you need as far as closing costs, down payment. Also, when you go on doing this process, you want to keep in mind you're going to need money. You need money for inspection, closing costs, down payment, and appraisal. Sometimes that's only a couple $1,000s. Sometimes it may not even be that much. But I get you to those people. I give you my resources when it comes to inspection. Now, me personally, I set a lot of this stuff up for my client because a lot of people don't want to deal with that. They don't want to deal with having to find an inspector or having to find an appraiser or having to find a loan officer. I actually, now as far as the loan officer, I do give them options or recommendations. But when it comes to inspection and stuff like that, I try to save them the most cost. And I set that up for them unless it's something that they want. After that, after you find out, how much house you can afford, what your down payment's going to be, again, you get all that from the lender. At that point, I set you up on an email strand, personalized just for you. You want this type of home, this many bedrooms, this many bathrooms, your must-haves, the things that you can weigh off should you have to. I also set you up with an app where you can, if you're just driving down the street and you see a home and it has a sign and you haven't received that in your email, you can always take a picture and say, hey, Sakina, can you look into this for me? So I do set you up on a couple different platforms so we can look at homes together. I take you out, look at a home. At that point, we decide if you want to do an offer, if you want to do earnest money, all those type of things. But that's primarily what I do. Don't ever let anyone tell you that you don't need a realtor, because you do. When it comes to that paperwork, not only that, you want to have one because we're the experts in the market. We know the market. And someone who's actually not in the market, who's not a realtor, do not know the back end of it. So definitely have a realtor. One thing I will say, to go back to your slide before this, Virginia, what we're seeing in this market right now is that actual mortgages are cheaper than rents. And that's because going back to what we were saying, these landlords are doing what they want. And I get it. It's a pandemic. People aren't paying. You're losing money. I get it. But I don't think they really are looking that it's a pandemic. People can't pay, so a lot of people lost their jobs. But in most cases, for example, I'm not giving the client's name, but I have a client who was paying $1,500 in rent. And when it was all said and done, his mortgage was less than $1,000. And he's getting more home than his apartment. So everybody's situation is definitely different. So that's my take on when it comes to home purchasing. Anybody have any questions? I can answer questions into what I do. If it's geared towards like lending or something like that, I can't answer. I won't answer that because I don't want to give you misinformation.
Awesome. Thank you. Any questions, anyone? You can take yourself off of mute. Feel free. Also, I do know, because we are on Zoom, some people may not want to ask questions. You can definitely email myself or Sakina, and we will definitely get your questions answered as well if you do not want to share it here on the Zoom meeting.
And no question is a dumb question. If you have a question, it may very well be the same question that someone else has, and they just don't want to answer. Just don't want to ask as well.
Well, I'll actually ask a question. As far as the market goes, how's the market looking right now for someone looking to purchase in the midst of a pandemic? How's everything looking?
Believe it or not, the market has been booming. Like we thought due to the pandemic, it was going to slow down. It didn't. It actually took off because we have a lot of people that were renters. that when this took off, they seen that the landlords weren't working with them or whatever. And when they got into a better position, they're like, hey, I'm going to buy. Now, when it comes to in this market, buying versus renting, the mortgage companies, the banks had options for their homeowners where they was taking those payments and putting them on the back end, some 6 months. Whereas you have a landlord that's like, I understand it's a pandemic, but you need to give me some money. If not, as soon as this open up, we going down and file eviction. And it's crazy because that's how it truly was. When they opened it up for eviction processes, there were a lot of landlords that were down there really filing eviction on people. So during the pandemic, it was better for you to be a homeowner versus you being a renter because the bank had options.
Absolutely.
And even in the winter, we thought it was going to slump in the winter, but it didn't. It can, like, even today, it's still taking off.
Wow. That's exciting.
Yeah, very. Mm-hmm. Yeah, it's still taking off.
Vouch for that, because even like with my my bank that I use for my mortgage, they were offering, I think, like a year through the CARES Act. You didn't have to pay your mortgage for up to a year. So yeah,
Mm-hmm.
there is some more flexibility when you're working with a actual mortgage company versus actual lender. So yeah, I can definitely
Mm-hmm.
that. That's so
Yeah.
I'm excited. It makes me want to sell and go get another house. Like,
Right.
awesome.
Right.
Let's see. I think we have.
I had Nikisha ask, what are your thoughts on condo versus house? It's really your preference. It's really your preference. Like Virginia was saying not too long ago, in a house, you have more leeway to do what you want on the inside and out. On a condo, you have more leeway on the inside because they like for everything on the outside to pretty much be the same. So it's really just your preference. Do you really care about the outside? If not, maybe a condo. And also you have to look at when it condo versus a house. How do you feel about a shared wall? Because that's another thing with the condo, unless you have a standalone condo, but it still comes into play with the outside. Pretty much you're not being able to do anything with versus you being able to do whatever you want with your house, whether it be outside or inside. That's a good question, though.
Awesome. Thank you, Nikisha. Anyone else have any questions, comments? All right.
I'm not showing anything else in there.
Okay. Thank you.
Mhm.
So these are actually some resources that I have available. I actually have these on hand. So if you are interested, these are all the courses that we have been going over the past couple months. The one that we went over today was this little giraffe, which is called Want Credit to Work for You. So this is the booklet I have available. Again, these booklets are free. If you need them, please let me know. I can get them out to you. I can even do like a mail drop off, what they call a door drop off, and get them to you. We don't even have to meet face to face. I know it's a pandemic. It's crazy right now. So we drop these off to you. Again, they are free. So here is some contact information. As I mentioned, if you do have questions that you want to ask Sakina directly, this is her contact information. She is with, is it Core Ohio
Yeah,
Realty?
Coral Ohio. Mm-hmm.
Yes, so please feel free to reach out to her with any questions. I know on her on the personal level, I've known Sakina for a long time. She's a really good friend of mine. So if
Yes.
you have any questions about the process, home buying, lending, anything that you want, she can get you in the right direction and get you started. I'm excited for everyone, and I appreciate everybody that came out today. It's well. It's always a pleasure. Let's see. Here's my contact information if anyone wants to ask me any questions as well. And this is actually the conclusion of our brunch for this morning. Again, I thank you all for joining us. If you have any questions, please reach out, comments, concerns, any feedback. Also, if you have any feedback, I would really appreciate if you could send that to me, whether it's Virginia, you're doing a good job, or Virginia, you're doing a horrible job. I don't care what it is. Please just send it to me just so that I know I'm doing something. Again, I appreciate you guys for coming out this morning. We'll be back next month. I have a Mother's Day edition with Saving with Children. So please join us next month. I appreciate you joining us and have a wonderful day.
Virginia, I
Yes.
do have, let me see in the chat because you can't see the chat still. I have Nikisha saying, thanks, ladies. You're welcome, Nikisha. Thanks to everybody that came also. And then I also have Jay Nicole saying, thank you so much. This was amazing. Thanks everyone that attended.
Yes, awesome, awesome. Thank you all. I truly appreciate it. This Zoom is recorded, so it will be on my YouTube page as well for Worthy of Resourceful Knowledge. So if you missed the beginning or if you want to share with someone, you are able to do so. So please do so. We appreciate that.
All right. Everybody have a wonderful day.
Yes, take care. Bye.
Bye.